Hi, hello, good evening, friends. Welcome, one and all, to Nifty Banker 2.0, India's first retail index traders online conference. I am Ashok Devanampriya, the CEO of Traders Gurukul, and also the host for today's program. It's a great pleasure to invite every one of you into this program today. I hope everyone are aware that we have successfully completed 50% of the classes so far. We still have 6 more sessions to go, and today being the 7th session. I am sure by the end of this program, you will definitely have a lot of knowledge with respect to some special topics on reverse buying. I would like to thank our media partner Money Control Pro, the largest financial portal in India with millions of daily readership on their website. They helped us to reach a wider audience in a very short period of time. I would also like to appreciate our title sponsor Espresso, the Sher Khan company, one of the leading discount brokers in India. The speaker for today is Mr. Kapil Dhama from Delhi. He is a full-time options trader and he has two businesses interests in both edtech and real estate. He started his stock market journey almost 5 years ago. Before that, he was working in Government of India as an engineer in the Central Labor Ministry. Kapil Dhama is speaking in a Traders Gurukul conference for the first time. My friend, it's a great pleasure to have you on board as a speaker. On behalf
Thank you, sir.
of
Thank you very much.
all the participants of Traders Gurukul, Money Control Pro, Espresso, I extend my warm welcome into this program as an elite speaker. Go ahead, Kapil. The stage is yours.
Thank you, sir. Thank you, Ashokji, to invite me on this platform. So, so today we will talk about iron fly in our adjustment setup, which is called reverse buying. Okay. So basically, many people are doing non-directional selling in our index, and many of them are doing iron fly. Many are doing iron condor, but in recent time, people are shifted to iron fly because if you are an option seller, then you need maximum premium. If you have to sell something, then you should go for maximum premium. And if you have to go for maximum premium, then you have to go on ATM at the money. So that's why in last couple of years, many people shifted from iron condor to iron fly. And there's one drawback for iron condor because it's heavy movement in indexes, like you saw yesterday, 1200 point fall in Bank Nifty and today 1500 point rise in Bank Nifty. So this kind of volatility iron condor can't handle. So that's why many trader moves to iron fly. So what is iron fly? In iron fly we sold ATM straddle, okay, and we buy some hedges on both sides. Something like if we got 1000 rupees premium in straddle, then we can buy 1000 point far away hedges on both sides, C as well as P. Okay, so there are many myths in this market. One myth is that option selling is safest kind of trading and there is a very less risk. So many people think that we can earn something like 2%, 3% or 4% regularly with selling. It is possible, but if you have some conviction and if you have some setup, okay. If you don't have any kind of setup and you are continuously selling strangles and you are continuously doing iron condors, then it will become very difficult to earn something like 3% or 4% per month, because there's a proverb that in option selling you eat like a bird and shit like an elephant. It happened because you earn like 0.5%, 1%, 0.5%, 1% per week, slowly, and someday you lose 10% of your capital. So that's why we move to iron fly, because if we got premium, if we got profit, then we will get maximum profit. We will get 3%, 4%, even 5-6% in a week. So that's why in today's topic I will guide you about iron fly, and there is a adjustment setup for iron fly. If you make an iron fly and you leave it and market is going up and down, it will give you panic. Okay, it will give you much more panic than iron condor. But if you make some adjustments according to market movement, then you can get good profit and you will not get any kind of panic. So after 1 year research, we developed a system for ironfly. It is called reverse buying setup. Okay. So first I will guide you about option adjustment. What is like I always say, the art of option adjustment. Option adjustment is something like an art. Okay, there is no fixed criteria to do any kind of adjustment in any kind of strategies. You have to behave according to market, because market is very dynamic in nature. So your trading setup cannot be static. Okay, many people told me that please give us some set of rule, that if market is going this way, if market move 300 point, then what we have to do. If market move 200 point, then we should do adjustments. So I told them that there is no fixed rule. It is something like freestyle wrestling. Okay, what happened in freestyle wrestling? You have to win. There's no rule in freestyle wrestling. So the same happen in option adjustments. Okay, so your trading setup cannot be static as a trader, and we are most afraid of losses. So basically, what's the main problem with option sellers or with positional option sellers? Let let it- let take an example. So if we make an iron condor, okay, and it's showing that we can get maximum profit of 5,000 rupees, and we can get a maximum loss of 4,000 rupees. Okay, so what will happen in case of loss? You will book full loss of 4,000 rupees, but when you get profit, you will not sit till last. Whenever you get 2,000 or 5,000 rupees out of 5,000 rupees, what will be your calculation? That I got 40% of maximum profit, I should book it. So major problem with option seller, that in case of loss, they book full loss. Okay, even in strategies, if you are going with risk defined strategies, then there will be a maximum profit and there will be maximum loss. So in case of loss, we book maximum loss, but in case of profit, we never book full profit, because if we want to get full profit, we have to sit till expiry. Okay, and if you are making an iron fly, and if iron fly is giving 100 points and still your both side loss is open, then you will get in panic, you will go to, you will become greedy, and you will book that small part. Okay, so the trader most afraid of losses and exiting profitable trade way too early. But the art of option adjustment help us overcome these fears. With adjustments, we can make our trade absolutely free. By the mean of absolutely free, I want to say that there will be no loss in your iron fly. Your iron fly will become absolutely free, and you will get maximum profit or you can get minimum profit, but there will be no loss. In that kind of situation, you can sit till last 3:30 of expiry and you can get maximum profit. Okay, so if you want to be a successful trader, then you have to take maximum profit of from trades, because in case of loss, we always book maximum losses also. Okay, so learning option adjustment method like reverse buying, which can help in reducing losses or eliminate loss altogether. Okay, with help of reverse buying method, you can minimize your losses, or even you can make your iron fly absolutely free. Okay, so learn the famous iron fly strategy developed by me, Kapil Dhama, and I will answer all questions related to this particular strategy. So this is an example of Mahendra Singh Dhoni. This is something kind you can correlate with your trading style. So my favorite cricketer is MS Dhoni. Why is my favorite? He's best finisher in world. Everyone knows, nothing new in this. But why he's best? This is the question mark. Okay. He's best because he always have a game plan and he always try to take match into last overs. If you saw his style of finishing, he always try to take game into deep into till last over. So something like that. If you are doing option selling, you have to go till last ball, till expiry, till 3:30 on expiry, and you will get maximum reward. Same we did in trading. We always try to keep our strategies till last ball, means till 3 p.m. on expiry day for max profit. If you are doing option selling, you can correlate that. If you sell something on Thursday for next expiry as a positional trade, okay, then you will got only 55% of profit till Wednesday, okay, and major chunk will left on table for Thursday. So if you are doing any kind of strategy like iron condor, iron fly, and anything else in option strategies, you got 55% profit till Wednesday, and remaining 45% of profit you will get on Thursday. But what happened if your loss is open? So many traders will not sit till Thursday. So that's why we developed some beautiful adjustment setups. These adjustment setups give us confidence to sit till expiry, to go for maximum profit without any kind of fear of loss. Okay. And even we can lock our profit also. I will give one example and I will give you all details. How can we lock our profit also? That we will got at least we will get some minimum profit from any kind of strategy. So today's our topic is reverse buying. Okay, this term is coined by me. And what is reverse buying? I will try to elaborate this. And there's a two part for reverse buying. Okay, so basically reverse buying is an adjustment method which can be used in ironfly and butterfly. We can use it in both kind of strategy. As you know, the risk reward and everything will be same in ironfly and butterfly. Basically, ironfly is the combination of debit spread and credit spread, and butterfly is the combination of two debit spreads. So two credit spreads. Okay, so both strategies are absolutely same, nothing different in butterfly and fly. So in this adjustment method, we always try to minimize our loss by giving debit from pocket. Till now, you saw many videos on YouTube for adjustments, and in each kind of YouTube video, you only get to know that we have to sell some kind of extra options. We have to take some kind of extra credit from extra selling. But in this reverse buying method, we don't have to push any kind of new margin in trade. We don't have to sell any kind of new option. Even we are doing adjustment from debit, not from credit. We are not taking any kind of credit in this strategy. This is completely a opposite approach which you saw on YouTube till now. Okay, on any other platform, everyone will tell you that if you want to save your and fly, you have to sell some naked option on opposite side. Okay, but in this strategy, we are doing adjustments in buying leg. We are not touching our selling legs. We will never touch our sell leg. We will never touch our sell straddle. We always try to adjust our iron fly with the help of buying legs. Okay, so that's why we have to pay some kind of debit from our pocket, or even not from our pocket, from the profit of iron fly. If you made an iron fly on Thursday and on Friday it's giving something like it giving you 50 points, then you can reinvest this 50-point profit to minimize your loss. Okay, so it is something like reinvesting profits for more gain. like you are doing in compounding. What we do in compounding? We always try to invest our profit also. So reverse buying is something like that. We have to invest our profit to give some kind of debit for adjustments to get maximum profit. Okay. So in reverse buying, we have to give debit from pocket. So we always try to give minimum debit. So if I have to give debit from pocket, if I have to buy some kind of option to hedge my strategy, then I always try to give minimum debit because I have to give this debit from my own pocket. So I always try to give minimum. Okay. If you have to give something to someone, then you always try to give minimum. So in reverse buying, we try to give minimum debit from our pocket. That's why we always adjust opposite wing of fly. There is a new crux for you here. Till now, let you made an fly at 38,000. You sold 38,000 C and 38,000 P for 1,000 rupees premium. Then you buy 39,000 C and 37,000 P. It will become a an fly. So in our method, in our reverse buying method, if market is going up, we will make adjustment on P side. Okay. Till now, if you are doing any kind of adjustment in iron fly, then you always try to adjust the side where market is going. But in reverse buying, we always try to adjust the opposite leg. If market is going up, then we will try to find opportunity to adjust P leg, P buying leg. But if market is coming down, then we will try to find an opportunity to adjust our C buy leg. Okay. So this strategy is completely opposite which you learned till now. How? Till now you learned that if we want to make some kind of adjustment in iron fly, then we have to take some kind of extra credit, we have to sell something extra, we have to sell some other options, like if market is going up, then we have to sell some extra puts, and if market is coming down, then we have to sell some extra calls. But here is opposite. We are not selling anything else. We are not selling any kind of option, extra option. We are not giving any kind of extra margin in this strategy. Margin will be fixed and we will give debit from pocket. We are not taking any kind of credit, even we are giving debit from pocket. So point number one, which is opposite, which you learned till now. Point number two, which is some kind of opposite in terms which you learned till now in iron fly adjustments. What if market going up, we will not adjust our C. Okay, we will adjust only if market breach our break even. If market is not going to breach our break even, then we will only try to adjust P, opposite, reverse. Okay, so market is very dynamic. So there are two main parts in reverse buying. Okay, in this method there are two main parts, because as I told, market is very dynamic. You don't know whether market will be remaining sideways or market give any kind of directional move. We don't know, but we have to be prepared for both kind of scenario. Okay, so as I always told, if we want to be if you always have to be Arjun, not Abhimanyu. Okay, so one kind of adjustment we can do in sideway market, and there is a one kind of adjustment which we can do in a trending market or a directional market. So first I will tell you the details about if market remains sideways. Let you made an iron fly on Thursday evening when market is going to close on expiry day. You made an iron fly around 320 or 315 for next whole week. Okay, then you don't know whether how market will behave in next week. So let on Friday market remain sideways. Sideways means market is trending in a range. market is taking some kind of support somewhere and market is taking some kind of resistance somewhere. It means market is trying to travel in a range. So in that scenario, we always try to bring our buy wings closer to straddle point. If we got that kind of opportunity that we can bring our wing closer with minimum debit. Okay, so let me ask you one thing. If you sold some straddle and you bought some wings, why you bought those wings? Those wings are only for protection, for any kind of directional movement. Okay, if I sold 38,000 C and 38,000 P and I'm going to buy 39,000 C, why I'm going to buy 39,000 C? Because if market go up, if market go to 40,000, then my 39,000 C buy C will protect me, will protect my C sell position of 38,000. This is the main concept of wings in iron fly. So if we got chance that we can bring our wings closer with minimum debit, then we will do it. First, you have to draw 2-3 support lines on chart, resistance level on chart, some support or resistance. Okay, let you made an iron fly around 38,000. Okay, then you have to draw some levels on chart, some support levels below 38,000 and some 2 or 3 resistance level above 38,000. Okay, then you have to take judgment of any kind of reversal from any level with help of price action. So in this reverse buying strategy, we always look at price action, not on strike movement that bank nifty moves 300 point, then we have to do adjustment. No,